This video today might sound like a little bit of a rant, and I guess it kind of is. What I want to do is address how indicators don't work. Now, if you're a new trader and you've been struggling a little while and you're having some bad results with the tools that you're using, I can see where you might come up with this, that the indicators don't work. But at the same time, you're going to think that about this whole trading thing. You're going to think that trading is a scam, that trading doesn't work. But on the other hand, if you consider yourself to be an educator or a teacher or even a guru, one of the dumbest things you can say is indicators don't work. Indicators work fine. But when you say something like that, there's one of three things that this implies. First is you're trying to sell something, maybe price action based, maybe volume indicator based, something like that that doesn't have to do with indicators. You want to steer people away from indicators. You tell them it doesn't work so you can sell them whatever else it is. The second thing is you're not a trader. You don't have the experience to tell people whether they work or not. And you're simply parroting what you've seen other YouTubers, other social media gurus say. And finally, the third thing, which is probably the case, is you don't know how to use the indicators. You're getting the wrong information from the indicators. You don't know how to assess the market movement around the indicators. You're assuming that an indicator is built for something in particular, and you're not using it right. So when somebody says to me that indicators don't work, all I can hear is they don't know how to use indicators or they're scamming people. If it's either one of those, your credibility as a trader drops tremendously. Now, indicators, they work just fine. Now, this first little bit that I talk about is kind of sarcastic, but the indicators work, and I'm doing air quotes when I say work. They work fine based on the formulas that they're working from. Every indicator has a formula, and it is working from this formula. Let's take a look at this. This is a 13 SMA. What this is doing is it's looking at the closing price of the last 13 candles, adding them all together and dividing them by 13, and then placing a point on the chart. That is a working indicator. It's doing exactly what we want it to do. And we could say the same thing about any indicator that you apply. Let's take a look at the MACD, for example. We'll put this on the chart. This MACD works exactly as it's supposed to work. It's looking at a 12 and a 26 moving average that's invisible on the chart, and it's measuring the distance between those. It puts a signal line on that chart to measure the distance between the signal line and the MACD line, and it draws a histogram. It does exactly what we need it to do. Now, again, most people that tell you that indicators don't work, in this example of the MACD, are using the MACD incorrect. They don't know how to use this indicator. They think it's being used for one thing, and when they try to use it for that thing, it doesn't function the way it's supposed to. They simply don't understand what that MACD is for and how to use it properly. The indicators work fine. There are tens of thousands of indicators out there that are built and they work perfectly. They work exactly the way they're designed to. Now, that was a little bit sarcastic because I know that that's not what people are talking about when they say indicators don't work. When someone says indicators don't work, they've probably had a bad run with indicators. They've used them incorrectly and they've got poor results. And again, this comes down to the whole fact that they're using an indicator wrong. What I've got on the chart is three different moving averages. This is the Trinitas system. It's very simple, very straightforward. And with these three moving averages, we get a ton of information, but that's because we know how to use and assess these moving averages. What we're looking at is how the price moves around the moving averages. The market makes a move and it tugs and it pulls at these moving averages to reposition this moving average. With that, we look at the orientation of the price to the moving average, and then we can derive some quality information from that. For example, in this little section right in the middle, we can see that we have these moving averages separated and they're all moving up. This is called a technical uptrend. And with this simple set of three moving averages, we can tell when the market is overextended as the price gaps from the moving averages. We can tell when the market comes back into a sweet spot where it's good to trade, where the price comes back into those moving averages. We can tell when the price is getting close to make a pullback because of these moving averages. We know when the price is most likely going to take off and where we could place an entry because of these moving averages. We can look at these moving averages as areas of overextension. We know that when we have a bigger overextension between a couple of different moving averages, the price is going to want to pull back into these moving averages. We are using these moving averages properly. We are not using them as simple crossover indicators. We're not going to take a trade based on a moving average. If we take a look at this blue and gray moving average, we see we have a crossover right here. We get a crossover right right in this section, but if we look at where the market is sitting up here. We are not going to be looking to take a trade long based on this upward crossover. Now, somebody that says indicators don't work probably would be looking to place a trade long at this crossover. And immediately what happens is a pullback. And if this is the way you're trading, using indicators incorrectly, no wonder you think they don't work. When you use them correctly, they work exactly as they're supposed to. We use the MACD as an example. Let's put that MACD back on the chart and we'll take a look at that. The MACD is not a crossover indicator. So many people want to trade these MACD crossovers where the histogram goes from one color to the other color. Every once in a while, you get a really nice opportunity and it works out very well. This looks like this is possibly one of them right in here. If we were to take a long trade based on this crossover to the upside, that wouldn't be too bad. We could probably make a few bucks on this, but that is not what this indicator is for. And you're going to find that more often than not, you're going to get bad signals. And if you're trading these crossovers on the MACD, you're going to find that yes, this indicator does not work because you are using it incorrectly. The MACD is a momentum indicator. It is the king at showing you what the market momentum is doing. And if you use it as a momentum indicator, you are going to find much different results. If we take a look at another indicator like an RSI, the way people are using the RSI, let me move this to a standard setting. We'll go to a 14 of the close. We'll get rid of this MACD. We're looking at the RSI. The way a lot of people trade this RSI is they buy when it gets oversold and they sell when the market gets overbought. So if you're looking for a sell in this area, you're going to be selling right in this zone here. And I will put that line on the RSI as well. So you're looking at the RSI crossing above that 70 level into overbought territory. And if you were to sell that, that would go terribly against you. And the same goes for this section right in here. If you were to sell this, you get a little bit of a pullback and then the market would continue against you. And even earlier, when you are looking at an area like this, where the RSI crosses into overbought, if you were to sell this, if this is what you're doing, you are going to think that indicators don't work. One of the biggest lies that I'm seeing on social media is that indicators don't work. I can't tell you how many Ultra Blue Forex members that we have that came from a situation where they were told, brainwashed, that indicators don't work. And they've been doing it for years trying to trade naked charts. And when they get to Ultra Blue, after the first week, one guy in particular started making money after the first week where he failed for the previous 3 years trying to trade naked charts. Indicators, when you use them properly, can be one of the most powerful tools in your trading arsenal. Now, there are a lot of traders that like to trade naked charts, and that's great. And if you're successful at trading naked charts, I would say keep doing that. You don't need to add indicators to something that you're doing that's already making you money. If, on the other hand, you are trading naked charts and it's getting you nowhere, the very first thing that I would do is start adding a couple of moving averages onto your charts and looking for things like overextended markets, pullbacks into areas like the zone, the space in between these two moving averages. Things like this, stuff that'll get you going. Moving averages can nicely identify a trend, so you don't have to think too much about this. This is stuff that has been tested. This is stuff that is used by professionals. Despite what the social media guys are telling you, they say professionals don't use indicators. That is absolutely not the truth. All the professional traders that I know that make millions of dollars a year all use indicators. Now, an indicator isn't to be traded by itself. You want to add a little bit of market assessment. You want to use your trading brain when you are using indicators, but you are going to find that indicators are an extremely important part of your trading. I use these moving averages every day, and I would not be nearly as successful as I am without using indicators. Now, I hope this puts things to rest for you. If you've always wondered that, or you've been on the fence, you've heard that indicators don't work, but trading naked charts just isn't cutting it for you. Whoever is saying that indicators don't work, that is a massive red flag. They are lying to you, trying to sell you something else, or they simply don't understand how to use indicators. Watch the other videos that I have on my channel. Almost all of them are going to do with indicators, and there's a lot of really good lessons in there. You are going to see how these indicators can make you much more profitable than you are now. Add some of these indicators to your trading, and you'll see the massive difference that trading with indicators can make. It really does clean things up. It really does simplify your trading, and a simplified trading approach is a profitable trading approach.